Good morning, everyone, and thank you for joining today's webinar. Today, we have scheduled webinar on Introduction to Accounting Key Skills in Accounting for Engineering Graduates, organized by Applied Science and Humanities Department of Parul Polytechnic Institute, Parul University. The main agenda of this webinar is to get knowledge about key skills in accounting for engineering graduates. I, Vaishali Nathwani, would like to introduce today's guest speaker, Alicia Carol White from Malaysia. She is the trainer and senior lecturer at INTI International College, Penang. She has completed her diploma and degree in accounting. She has also received Best Student Award for Degree in Accounting Program and Faculty of Business Administration, both the fields. She is also the UNITAR Accounting Club and also represented the university at the international level and held accounting quiz which was held at Multimedia University, Malaysia. She is known for being able to break down difficulty modules into digestible modules for students under her guidance. In addition to teaching, she also believes that the practical aspect of accounting is much more important. This is the reason why she is reaching out the industry as well as academics for sharing her knowledge about accounting. Currently, she is looking to connect with accounting and finance professionals to support the development of your young generation of students. It's a privilege to welcome you, ma'am, here on the International Women's Day.
Thank you, Madam Rashali and Mr. Himal for inviting me. So as Madam Rashali introduced me, so I'm Alicia from INTI International College, Penang, Malaysia. So I'm actually honored to be here today. Thank you so much. So what I'll do, I'll share my slides. Just give me a moment. All right, can you see my slides? You can see my slides just now. I'm just checking before I start talking.
Yes, ma'am, it was visible, but right now it is not visible.
Okay, all right.
Okay, fine. Perfectly
all right,
fine.
Thank you so much. So I shall
yes.
begin.
Okay, ma'am.
All right. So again, the title is actually Accounting for Engineering Graduates. So I'm Alicia from INTI Penang. And the agenda, what I would like to cover today would be business skills for engineers. What is the difference between financial accounting versus management accounting, as well as the application of financial accounting. So how do we actually use accounting in the day-to-day life? So the first thing that we can talk about would be the business skills that are required for engineers, because we know engineers, they are very technical oriented people, but there's also some business skills that are required. So according to Harvard, they did mention that these are some of the skills that we see. We have management essentials, creativity, financial accounting. You will see financial accounting there on the screen. Negotiation, the ability to spot opportunities and validate ideas, ethics, as well as effective communication. So I'm here today to talk about one of the business skills that has been mentioned here, which is financial accounting. So what is it? So let's look at that. So the first thing, when people talk about accounting, they are like, oh, accounting is all about numbers. But actually in accounting, we normally can divide it into two main fields, which are financial accounting as well as management accounting. So in the next few slides, I will be actually just sharing some key differences between these two. There are 11 in total, so let's look at that. So financial accounting versus management accounting, what is the difference? Because normally even my own students that I teach in Malaysia, they will be wondering what this is. So the first thing we see would be the meaning of financial accounting as well as management accounting. So in financial accounting, what the people will do, or the people that work in this industry, they will actually start off by, classifying, analyzing, recording, and summarizing the financial affairs of the company. So you want to know whether a company is making profits or not, we will look into the financial accounting side of it. We will not look at the management accounting side. So we actually need to we call this in accounting double entry bookkeeping. So this is where they actually, for example, if you go to a restaurant and you have your lunch and you get a receipt, so that receipt, you will take it and you will actually look at it and you say, okay, where do I put this in? How do I record it? Where does it go? All right, so that is the financial accounting part of it. Management accounting, on the other hand, basically it talks about managing the business, making decisions. So it's very, very internal when we talk about management accounting. How do we apply financial accounting? So financial accounting is prepared to show forth the accuracy and fair pictures of a company's financial affairs. So later, I'm going to share on the application of this part. So that you yourself and my viewers here can actually look at any company's financial statements, and you'll be able to at least get some understanding about what it is. Management accounting, on the other hand, it's about management. So they will look at departmental reports, budgets, to actually what do we need to do with it? What kind of strategy do we need to come up with? So the financial accounting, the scope is very small, and it's not as much as management accounting. For management accounting, the scope is very, very wide. It goes from anywhere from budgeting to forecasting and other things as well. And for financial accounting, the main measurement is quantitative, meaning that we only record the numbers. So if we cannot record two tables, two chairs, we literally need to quantify what is the value of that table, that two tables, what is the value of that two chairs. However, management accounting, on the other hand, we are not only going to look at the numbers, but we want to ask the question, what does this number mean? What does it indicate actually? And financial accounting, when we talk about the fifth difference, key difference, is dependence. So financial accounting is independent of management accounting. It's not dependent at all. So financial accounting stands alone. Management accounting, on the other hand, will take the input from the financial accounting people, and then they will do analysis, forecasting, and etc. So that's the fifth one. The next one will be basis of decision making. Financial accounting is very, very historical. It looks at the past, while management accounting looks at two parts: the past as well as we forecast. So we predict for decision making. For financial accounting, one of the major components is that they are legally bound to prepare these financial accounts. So what do we mean by this? In Malaysia, in India, there are company law where inside it actually mandates that you need to prepare financial statements. So that is the legal requirement, but management accounting has no such thing. And because it's a legal requirement, so in certain countries like Malaysia, we actually have when we prepare our financial statements, we have to prepare in accordance to the Malaysian financial reporting standards. We are not allowed to just do in whatever way we like. We actually have to follow the standards per se. What do they say? If you want to record something as a building, then what is the criteria? How do you measure? All those stuff need to be following the standards. But for management accounting, there's no format. So you just prepare. Each company will have their own method of presenting. And financial accounting, it's mainly used for investors and also shareholders, as well as academics, students, financial analysts, regulators, etc. But management accounting is normally for management. So we can say in a nutshell that financial accounting is very external oriented, while management accounting is very internal oriented. And as I mentioned earlier, the statutory requirements there's now, and also the format. Financial accounting should be prepared as per the GAAP, General Accepted Accounting Principle. So in countries, GAAP means every country will have, so we will look at a sample afterwards, and this will be prepared in GAAP form, or IFRS, which is International Financial Reporting Standards. And management accounting, as I said earlier, no requirement at all. And financial accounting, it's verifiable because there are documents to prove that if you're recording something, a value of a table, you will have the documents to prove that you got the table. Where do you get it from? What day did you get it? At what value? And management accounting, on the other hand, it is predictive, therefore not immediately verifiable. So that is just to articulate the differences between financial accounting and management accounting. So let us go and look, and this is what I feel is very, very important on how do we actually apply financial accounting in the day-to-day. So I have selected ratio analysis actually to illustrate how we actually apply accounting, because when you're talking to an accounting student, you know, we will teach them everything up to this point. But today I figure that I would just highlight something that is more practical, that you can, viewers can go back and actually look at it. So what is ratio analysis? Basically, ratio analysis is a quantitative interpretation. So again, numbers. What does the number tell us? And it actually tells a lot about a company's profitability. Profitability, is the company making profits? Is it growing? Is it decreasing? And what are the reasons for that? Is this company solvent? Are they going to be able to continue in a year's time, in 10 years' time, 15 years' time? And we also want to see their operational efficiency. Are they operating well? How efficient are they actually managing their assets to generate profits, sales, and all that? And we also want to see the liquidity position, where we're looking at the cash flow. Because at the end of the day, when we talk about accounting, it is on accrual basis. But the thing is, we want to know at the end of the day, what is our cash position? Because we cannot, cash is the lifeline of the business. So we need to actually understand. Profitability is one aspect, but liquidity is also very, very important as well. So I'm just going to share some financial statements because I did mention down here in the definition here, there's something on financial statements. So let us look at some financial statements. So this is Apple Incorporated. I believe the viewers will have heard of this company. They make the Apple iPhone, the iPad, and all that. So this is Apple Incorporated's financial statements for 2021. And this is actually what we call the statement of operations. And this has been prepared in accordance to US Generally Accepted Accounting Principle, US GAAP. So you can see that they actually classify and they actually show comparison 2021, and then they actually restate the figures for 2020 and 2019. What is this for? This is actually to see, if you can see here, like product sales is 213,883. And in 2020, it was 220,747, and it goes up. So we see that the sales from the products are increasing. Similarly with the services as well. So it tells a lot about the business. And then we can see the gross margin, or we call it the gross profit, as well as the net income. So this is the first financial statements. And then we also have a continuation. We call it the Consolidated Statement of Comprehensive Income, just showing. And then we have what we call the balance sheet in the US. In the other countries like UK, Malaysia, we actually don't call it balance sheet. We actually call it statement of financial position. So what we have here in the consolidated balance sheet would be the assets. Basically, this is what Apple owns. And we also will see on the next slide where we have the liabilities, where it's what we mean by this is actually what the Apple owes to its suppliers. What kind of loans do they have? And then of course they have the shareholders equity, and this shareholders equity will bring us to this next statement called Consolidated Statements of Shareholder Equity. All right, so now we will go into the application. So this is ratio analysis. There are so many ratios to calculate, but I'm not going to do all right. I have just selected a few to illustrate how we actually apply. So the first one I'm going to do is on solvency ratio, and I'm going to share about current ratio. So current ratio is very important because it actually tells us how many dollars, ringgit, rupees, current assets does the company have to cover each dollar of its current liability. So there's a formula, and the formula is basically current asset, current liability. And I have just extracted, I'm just taking the 2021 and 2020. So basically what we'll do is we will take 134,836 million divided by 125,481. And you get 1.07. And then 2020, it was 1.36. So we can see that this means that from 2020 to 2021, the company's liquidity has declined. So we can see that both the current asset actually decreased, but the liabilities increased. So what does this mean? Meaning that this company is facing a little bit of liquidity issue. So we have to actually check against the industry and also compare within Apple itself whether this is actually healthy or not. So I just want to share where did I get the information from? So basically, this is the consolidated balance sheet which I shared earlier. So you take the total current asset for 2021, where I put it here, 134,836, and then 143,713, which is here. All right, so that is the current asset part. And then we have the liabilities, where 125,481 and 105,392, which is here. So we just divide and we get the answer. So this is the first ratio that we're calculating on solvency. The other one that I find that is very, very, very important is something called the cash ratio, where this one, cash ratio, actually considers the most liquid asset within the current asset. So we want, because cash is already liquid, very liquid. If you want cash today, you just take it out, right? So you don't have to go and convert. So we want to see what is the cash ratio. So the formula is cash and cash equivalent divided by current liability. The only difference is now we're using cash and cash equivalent. So we have what we can see in 2020, it was 0.36, while in 2021, it decreased to 0.28. So this is also not a very good indicator. So that's how I extracted it out. The current asset, this is our most liquid asset, and the rest are less liquid. Okay, we call it less liquid. Why? Because it's very difficult and takes very long to convert into monetary or cash terms. And then this is the current liability, right? So that is on the solvency ratio, on cash ratio, current ratio. So now we're going to go and look at the operating profitability and efficiency. So we will look at asset turnover ratio, where it actually measures the operating efficiency of the organization, of Apple in this case. So asset turnover basically measures how effectively our asset is used to generate sales. So we will see here, total sales is 365,817 million, while that was for 2021. The total assets is 351. So meaning to say, for every $1 asset has been generated, every $1 of asset, 1.04 sales is generated. So that is the meaning. So, but in 2020, it was 0.85. So we can say that Apple has actually increased its asset turnover from 0.85 to 1.04 times. So this is good. So we want the numbers to be higher. The higher number means better for the organization. So again, how do we get these numbers? Okay, so total, we will actually use the consolidated statement of operations, where we will use the total net sales and for 2021 and for 2020. So we have 365,817 as well as 274,515. And then we will take the total asset from the consolidated balance sheet, 351,002 and 323,888. So that's how I got the numbers. I take these two and I divide. And that is the third ratio. And the next one is on profitability, where we're going to look at gross profit margin. So basically, this is very important because we want to know what is the sales as well as the direct cost of making a product or providing a service. So we will take the gross profit divided by sales, multiply with 100%, because at the end we are going to mention this as a percentage. So for gross profit for 2021, the figure is 152,836 and 2020 is 104. So we can see that it has increased. Total sales has also increased. So therefore, we can say that from 2020 to 2021, Apple has demonstrated an increase in the gross profit margin, which is good, which is healthy for the organization. Then, so this is how I extracted the information. So what I actually did is I took out this one, because I want the gross profit. So I took 152,836 divided by net sales and 104,956 divided by 274,515 multiplied with 100%. And that is how I got this 41.78% and 38.27%. And then we are doing the net profit margin. Why we need this? Because we want to know. Because in gross profit margin, we are actually not even including the operating expenses. So net profit margin will give us a better indicator. Okay, after we deduct the operating expenses, what is our net profit margin? So it measures the rate of profit on sales after operating expenses. So net profit is 94680 in 2021, and in 2020 it was 57411. And the sales we just took from earlier, 365,817 to 74515, and we'll get and we have to multiply with 100%, so we get 25.88 and to 20.91%. So this is how I extracted total sales, 365,817 to 74515, as well as the net income here, 94680 with 57411. All right, so as a summary, after we do all the calculation, because the most important thing is how do we interpret this and what does it mean? So as a summary, we can see current ratio in times. We see that for every $1 current liability we actually have 1.07 current asset. And in 2020, it was 1.36. So what we normally want to see is it an increase or a decrease? So we'll compare 2020 to 2021. So when we do the calculation, we will see that this is the new figure and this is the old one. So we see a decrease of 21.2%. Cash ratio has also shown a decline from 2020 to 2021 by decreasing by 22.81%. However, on the operating efficiency and the profitability, we see that it is increasing. Increased by 22.97 times, because 2020 was 0.85 and in 2021 it is at 1.04. So it's good. And then gross profit margin, we see that it is increased 9.27%, and net profit margin also increased by 23.76%. So at the end of the day, this is just one of the aspects that we look at in the financial application of financial accounting. Actually, we call it financial reporting per se. Financial reporting simply means all these financial statements. It actually will tell to investors. If we want to buy shares in Apple, we need to actually do some quantitative analysis. But of course, we cannot say that we can only rely on these numbers, which is the financial aspect. We also have to look at the non-financial aspect as what the company is doing in terms of the environment, social part, the community, what about the governance of the organization. All these are very important before we make a decision whether we want to invest in a company's shares or not. Actually, that's the main ultimate goal of this session today. So as a conclusion, I would like to say that I hope my viewers today just get a little bit of insights on how do we actually, what the people in accounting actually do. financial analysts, most of the time, they actually do a lot of that stuff. And I also want to mention something explicitly about we cannot just rely on the financial numbers, what we see in the financial statements, because it can be very misleading. So we need to do more analysis in terms of the non-financial aspect, looking at what is very well known today as ESG. And ESG is very important, whereby it looks at the environment, social, and governance of every organization. So, in conjunction with International Women's Day, also we can see that in ESG there is even part in our United Nations Sustainable Development Goal that actually mentioned about women equality as goal number 5. So we want to see more women, women, girls, giving access to education, giving access to also to be on the board of directors, not just, because women are known to, be studying and all that. So that's just one aspect of ESG. And of course, they talk about all the other aspects as well. So I would like to say thank you and open up for Q&A at this point. Madam Ashali, question? I don't mind taking questions if there's any, since I got time.
Yes, ma'am. It was very nice listening to you, ma'am, and I had a great knowledge about accounting. Surely it will help our students.
Hopefully. I can share the slides if you want, not an issue. I can send it to Mr. Hema later.
Yes,
So they
yes.
can just, yeah, sure. I'll do that.
So once again, the students as well as faculties can go through the slides, and if they have any doubt, then we will surely
Can.
communicate with you.
Yes,
Yes.
sure. More
Yes.
than welcome.
So right now, there are one or two questions from our
Yep.
end.
Mm.
Yeah. So some students are asking why engineer means accounting is important for engineering students.
Okay, because of course what I shared today actually is not so
Yes.
much for engineers per se, right? It is actually because generally when we get older, we want to invest. We want to invest our money to get more return, right? But the thing is, many people I know, if you're not from the accounting field, you wouldn't know how to read the financial statements. You don't know what to look for in a financial statement. So people will ask why engineers need to know this. It's because you yourself later, when you start working, you have excess money, you want to invest. So you, instead of relying on people, you can actually just look at the financial statements yourself, do a simple calculation and decide. Because at the end of the day, we don't want people to just, because when you go and ask a broker, hey, what shares to buy, right? What shares to buy? They will tell you buy this share, right? But the thing is, you need to understand what does that mean and do a little bit of background. That's what I'm trying to actually do today. So that is important. And also talking about accounting per se, right? Of course, engineers will like, I don't need to know that. Let the accounting people do it, let the costing people do it. But at the end of the day, when people show you something, there's no harm in having more knowledge, I would say, because it's good for us anyway. So when people talk to us, they say, hey, you know what? I saw this. Well, what does that mean, right? So it helps. Any knowledge to me, it doesn't matter what field, it is good to have. That's my opinion. Yeah. Thank you for the question.
Yes, ma'am. Um, do engineers? It is a just a question
Yep.
that do engineers or accountants make more money?
That's a good question. That's a good question. Actually, I would say engineers do make more money than accountants, but it depends on what kind of engineering. And even in accounting, there's money to be made. Again, where you want to go. That's the question, right? So if you want to do like tax, you can actually become a tax consultant. You can actually do your own business, and you can actually decide how much money you want to make. So at the end of the day, it's about how do you actually navigate your career, I would say. Of course, there's money to be made in both industries. Yeah.
But I think nowadays entrepreneurs make more money.
Precisely. I totally agree. I mean, there are many people who have studied a particular degree in the university, but now they're doing something completely different. So, but the,
Yes.
the knowledge stays with you. That's one thing I would say. The knowledge will stay with you. And for engineers, knowing about accounting, knowing about human resources, it will help them anyway at the end of the day. Then they understand people better, right? They understand numbers because at the end of the day, accounting is everybody says it's all about the numbers. Why are you talking to me about numbers? Don't show me. Yeah.
Yes, actually, in our human psychology, we believe that accounting is totally related to money, right? But nowadays,
Yes,
I think entrepreneurs, startups, all they need is accounting. At least
correct.
there should be some knowledge, basic knowledge of it.
Yes,
Yes.
definitely, madam. Yeah, definitely. I agree.
Some of our students who are entrepreneurs working on entrepreneurship, they wants to ask you that how to start with accounting in for entrepreneurship firm.
Oh, okay. So basically, when you're talking about entrepreneurship, it depends on what kind of form of business organization the entrepreneur is setting up. So if you're setting up a sole proprietor, then very basic, you can use Excel and you can keep your books, right? But if you're doing a partnership also, but company, we have to look at the law because as far as Malaysia is concerned, we actually need to file the financial statements if it's a company. So I'm not so sure about India, what is the requirement. So may want to look into the law and see what do they actually mention about the accounting part of it. Definitely there will be in the for us it's Companies Act. Yeah. So definitely, if it's very difficult, there are people who are actually doing. I believe in a lot of countries now, there are a lot of people who are actually helping small medium businesses with accounting, and they often they charge a fee for whatever. But I think it's negotiable, so they don't have to do it on their own. But having that knowledge at the end of the day will still help, right? So that when people show them something, they can actually understand what people are telling them. Good questions coming in. Very good
Yes,
question.
yes. Now, talking about our personal life also, ma'am. So sometimes accounting is needed for our personal life too, right? Managing financial terms and all that thing. For that, what is your advice to manage the account skills for that?
Oh, okay. So basically, when we're talking about personal, how do we incorporate accounting in our daily life? It's basically very simple. Just I make it very, very simple. So we get an income. So when you're working today, we all get a salary every month, right? Whatever amount of money. And we have our expenses. We pay for, maybe rent, we pay for food, and all those things. So at the end of the day, we're actually doing accounting because we need to manage money coming in and money going out. So that is actually keeping accounts at the end of the day, but simple accounting. Yeah, yeah, simple accounting.
During last one or two questions, ma'am.
Yeah, sure, sure, sure.
Yes. During entrepreneurship or startup, starting with our firm, we sometimes get failure, right?
Yep.
While maintaining our accounts. So we get afraid that should we move on or not. So what is your guidance for that thing to our
Okay,
students?
okay. So basically, that question will go. Starting a business takes a lot of, I would say, takes a lot from a person, and I would normally say that get the knowledge on entrepreneurship because it's about taking risk. And I always say before you even start a business, even before you talk about accounting per se, let's just talk about starting a business. You want to start a business that where there is a target market, there is a demand for the product, so you need to know what is your product or your service that you actually want to do and who is your clientele. You cannot say that I want to target everybody. No way you can do that because the market is so many. I mean, you talk about women and you talk about single woman, married woman, you talk about men similarly, you talk about the age group and all this income level. So that is the first fundamental step, is identifying what is your product or service and is there a demand for it. If there is a demand, then go ahead. But ask also yourself, do some research, talk to people. Hey, what, I'm starting this business, I'm planning to start. What is the demand like? How much should I set? Because at the end of the day, customers, they will come to you if you have set at a correct price. But if customers keep coming to you, they see the value that you give them, then of course your business is going to take off and you are going to be able to make money. Because at the bottom line is, for startups, the first year of business is the hardest because it's about survival. whether are we going to be able to survive the first year. So I often tell, I teach this subject about business plan, right? So I tell my students that at the end of the day, it's not just the capital at the initial start that you need. We call it startup capital, but you also need to think about working capital. So what is working capital? Working capital is to take you from the moment you start your business right up to the point where we call it in accounting as break-even point, where it's a point where you got no profit, you got no loss. So many entrepreneurs have failed to look at that part of it. Not just the startup, how much I need to start my business today, but what about, it may take maybe a 1 year or a couple of years or 2 years to actually get back that return. But I need money to keep me going, right? So that is what I would say. So I need to think about that aspect as well. Yeah.
So, last but not the least question, as today is Women's Day, right? So, what is your advice for women to make more money or to save money?
I should tell you myself that. Actually, I would say for a woman, at the end of the day, we have a lot of skills. So you can definitely leverage on your skills. I believe women are multitaskers anyway. We can do, we can talk right now and do something else, right? So we can, like, for example, if you're having a full-time job, if you are good at, baking, for example, right? Then you can start something small at the side, maybe do a few orders, on a weekly basis. Just start up, kick it off. And you never know where that small business can become something big. So we must always remember that we can do it. We have to believe in ourselves. I believe, whether we are women or not, women are able, whether it's man or woman. At the end of the day, is we believe in ourselves. I believe we can succeed in anything we choose. Yeah.
Yes, I agree with you. Believe in yourself.
Yes, that's important.
Yes. Thank you so much, ma'am, for joining with us today. It was very nice listening to you. And
Thank you so much.
obviously, your presentation would help our students as well as the faculty for accounting in
Sure,
future life.
sure, sure,
Thank you
sure.
so much, ma'am, for
Thank you
joining
so
us.
much. Thank you
Bye.
so much. Bye bye. Have a great day. Bye bye. Bye bye.